Hello everyone, I hope you guys are having a wonderful day. I am Arif, your financial freedom journey partner. Today I will go through my stock portfolio, specifically TFSA. So under TFSA, I do have 9 positions. Let's go through each one. So the first one is Canoi EIT Income Fund. So the reason why I have purchased this stock is basically the yield or the dividend, which is 8.99%, which is massive. A few days or weeks ago, it was above 9%. Currently, I'm holding 101 shares of EIT, and all-time return is 52%, which is also good. So it's uh, mainly a dividend stock, but the performance is also doing great. The growth is also nice. The market cap is 2.02 billion, which is great. So that means it's not a small market cap fund. So my strategy with this EIT.UN stock is that I'm gonna add few more stocks to EIT so that every month I can get a dividend of $13. I will use this $13 to purchase one more share of Cano EIT Income Fund. The next share is Manulife Financial Corporation, which is pretty popular. The dividend or yield is also pretty impressive. It's 5.20, and all-time performance is $58. So beside dividend, it also increased in value by $58, which is great. So currently I'm holding 33 shares. My strategy is like maybe in future I'm gonna add some more because the dividend is very great, and also it is expected the share value will increase in future. The third holding is VDY, Vanguard Canadian High Dividend Yield Index, which is a major portion of my portfolio. Currently, I'm holding 75 shares, total value of $3,256, and all-time return is $73. As this stock is pretty much like based on the yield, so it is a dividend stock. The yield is 3.64. The good thing is like it is combined with multiple companies, so that risk is very less in here. So that's why I like VDY, and the market cap is also good, 1.79 billion. So in future, I'm gonna definitely add more and more to VDY for dividend. The last stock under the cat section is VDY, sorry, VFV, Vanguard S&P 500 Index ETF. One cool thing is that VFV is the similar version of VOO. So if you are in Canada and you want to purchase VOO S&P 500 Index of America, then you have to pay taxes for your purchases. But if you hold VFV, it is kind of like the same thing you are doing, but it is Canada based. So here you don't have to pay taxes on your dividend, which is great. So under TFSA, I am holding 40 shares of VFV. Total value is 3,919, and you can see it is doing great. So all-time return is $262, which is pretty much 7.19%. It is impressive. The market cap is pretty huge, 7.01 billion, and mainly it is a growth stock, but the yield is also good. That is 1.16. So you are getting the dividend, and also the share is growing in value. My average price of purchasing this VFE was $91.42, and now you can see it has increased to $97 in few weeks. So that means it's a great stock. Now let's look into the USD based stock. So I follow Warren Buffett in terms of stock investment. So according to him, we need to invest only on those stocks which we are familiar with. So I'm a tech person, so I know technology and technology related companies. So my main strategy is to actually invest in tech stocks. Whenever we're talking about tech stocks, US is the central of tech companies. So that's why I'm holding multiple tech related stocks under USD. So the first one is Amazon. So I am holding 7 shares of Amazon, which is $993, and the market cap is huge, 1.46 trillion. And currently Amazon is not giving any dividends to its shareholders. It's okay because this is a growth stock. One cool thing about Amazon is not only the retail, the marketplace. Beside marketplace, Amazon also have huge cloud infrastructure. I'm a cloud computing engineer, so I know that AWS is leading cloud market, and cloud is the next big thing. So in my opinion, if I hold this stock and add more and more stock in here, in future it will go up and up. So my suggestion would be to purchase more and more Amazon stocks. The next one is Ford. So also here I pretty much follow Warren Buffett's terminology. So he said, whenever you are doing an investment, first you have to look around you. So what kind of products you are seeing people are consuming more and more. So I live in Toronto, so whenever I go outside, pretty much like I see Ford motor vehicles. So I thought like, yeah, it's pretty popular. Why not hold some? So currently I'm holding 25 shares of Ford, which is $402 in value. And you can see the performance is huge. So I got returned $69, and the growth percentage is like 20.76%. So when I purchased this share, the average price was $13.32, and now it's 16. That is pretty great. The market cap is also awesome, 65.05 billion, and it also gives a nice dividend, which is 2.78. Beside that, one thing also need to mention in here, this Ford is also investing in automobiles, electric cars. So it is great. So it is also speculated that in future Ford will compete with Tesla in terms of electric cars. So if we invest now, it this specific Ford motor stock can give us a lot of value in return. The next one is Google, and we know which is pretty popular. Uh, Google is kind of like the big giant tech company, and if we see the growth rate in 5 years, it has grown 153%. That is massive. So if you invest into 2018 $53 in Google, now your 53 will grow to near around like $120. That is crazy. So that's why I didn't wait longer, and I purchased 9 shares. That is $1,088 in value, and I have already got a pretty decent return. That is $75, 7.50%. As Google is more of a growth stock, I'm not getting any dividend, which is totally fine with me. And the market cap is in 1.59 trillion. One cool thing about my portfolio is that you can see none of my stocks are showing negative. It's a great achievement from my side because it's very hard to actually predict the stock market. But if you take calculative risk, then definitely you'll get good reward. The next stock is Meta, which is the parent company of Facebook. So Meta is currently struggling a little bit. Previously, the share price was $377, but now it's only 161. So I see it as a discounted price. So that's why I purchased 5 shares, $891. And so far I got $92 in return, which is like 11.51%. That is great. Within few days, I got this return. So when I purchased the share, it was like 159, and now you see you can 178. It's very big jump. So it's also a growth stock, so it doesn't give us any dividend. The market cap is huge, 485. So one good thing to notice, whenever you purchase a stock, please look into the market cap. So if the market cap is not that big, then the risk is higher. If the market cap is in billions, and then you can kind of like relax because there is less chance to get the company bankrupt. So let's focus on the market cap, and also the PE ratio is also important. So if the PE ratio is less than 20, that is great. So in terms of Meta, the PE ratio is 14.95, which is really attractive. So that's why I invested my money in this stock. The last one is Snap. This is a very risky one that I bet on. So if you see the history of Snap, it was pretty much like $73, $78 per share, but now it's just only 12. So why I'm betting on it? First, I see some value in here. That is, when the stock was $10, which was the bottom, pretty much the bottom of the stock, I purchased few shares because I am speculating this based on this market cap, which is 19.16 billion. So it's not a small cap company. Beside that, it's a tech related company. Tech company. So currently the company is struggling because of some security issues, but for sure there is a high chances to bounce back, and I am betting on it. So just imagine, like, if this stock recovers and just got not like 70, just 50, like half of it, then I'm gonna make a lot of money. So whenever we are investing, we have to do some safe bait and some risky bait because we want to grow our portfolio. So we need to take calculative risks, and this is my risky stock. And I also have a strategy for this. So when I purchased this stock, the average cost was pretty much $10.37. So my bottom line is $8. So if this stock goes below $8, I'm gonna sell it. So this is my strategy. So that's all of my stock update under my TFSA. So I think, like, in terms of the stock and stock market, we have a very good chance to actually make some money in here, but we need to know exactly which stocks can give us the best value in return.